Hey traders and investors, it's Serge Berger here. What I'm going to talk about today is General Electric. General Electric this morning on Thursday, April the 17th, announced its first quarter earnings and for the most part seems to pass what folks were looking for. So that gets me sort of sitting up in my chair and then looking at the charts. Furthermore, sort of confirms that interesting talk here. Basically, GE is interesting to me at this point, not only from a chart perspective, but also because the chart matches up with the late cyclical themes of some of these large mega cap stocks actually that should show some relative performance, as I've discussed here a couple times over the past few weeks. So if we look at GE now from a charting perspective, we kind of flip back, and there's really not a whole lot of crazy interesting stuff here besides maybe this little thing here. And if you note my understatement here, basically GE is at a monster important spot. Okay, so if GE can overcome this consolidation phase that's been here now for the past few months, basically it'll make a break past this massive downtrend line dating back to the year 2000. So a very critical spot for GE here on the long term perspective. And again, it matches up with the sort of near-term theme of a late cyclical potential bull rally or at least outperformance in the stock. And then we go in a little closer, and we sort of draw a little channel here. You can see basically the stock, if we connect most of the dots here, is very much trending still and holding its major support line here, dating back to say June 2012, and its 200-day moving average all the same, which is that red line up here that you can see. And then, last but not least, if we kind of just, keep zooming in on the chart, what's incredibly important here is just the fact that this morning, and again, the day isn't over, obviously, so a lot can still happen here on this options expiration Thursday, ahead of a 3-day weekend. But basically the stock is actually making a significant move past a multi-month resistance area somewhere near the 26, let's call it 26 and a quarter, 26.30, 26.40, something like that. And it's all taking place on an up gap. That's very important. That's the kind of stuff you want to see. So you have a stock that fits into the cyclical model where it should outperform from a capitalization point of view. You've got a stock that really looks to be at an incredibly important spot on a long-term chart, and a chart that both for the medium term and the near term is doing some important things. Now, GE is not a super sexy stock to trade. I understand that, but at the end of the day, in this business, it's not about only trading those things that move 5% a day. But it's really about making money, and GE can certainly be a money maker here if we can get this thing moving up to say $27.50, $28 with the appropriate amount of say option spreads with defined risk below the support line here, but below the resistance line. I think this could be a very nice risk reward trade for folks with sort of the more active investing sort of time frames of at least a few weeks to potentially take advantage of. So it's not always about trading those high flying stocks that that rip around like crazy. Sometimes it's all about understanding where we are in a cyclical model, taking some trades also in some of the slower moving things, sort of the slow moving giants, gentle giants, such as General Electric. Hope this makes sense. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Take care, guys.